Hi, so my name is Nabil. We're going to trade today during the opening of the American session. What we do is mostly order book trading. That means that we will try to analyze the market flow and see if we have more buyers or more sellers and take advantage of the trend, basically. So what you see here, it's a platform called ATAS. You have a lot of similar platforms. This one is ATAS. Here is the S&P on the left side. In the middle, it's the Nasdaq, and here it's the crude oil. So basically, what we do, we try to pick points where we have a good probability to make money, basically. And we will confirm that with the order book. That means that thanks to the charts, thanks to the macroeconomic, thanks to all this information we have, we will take a decision. But this decision will only be confirmed with the order book. If the order book doesn't show any strength in our buy or in our sell, in our position, then we will not enter. If the risk is not assessed correctly, we will not enter. So basically, that's what he's going to do. The tricky part is that now it's 3 o'clock. Okay, 3 o'clock, we have the US opening in half an hour. So we'll see if we have some good position we can take. So when we start, what we'll do, we start with the chart. Let's get the chart. It's not the most complicated thing we do. We tend to see, okay, do we have any level we can work on? Basically, that's it. If we have, then we'll see, okay, we have, for example, we have the order book of the S&P here. We have the chart of the S&P here. Where is the next level? We have a level of the S&P, for example, up right here. We have highest of yesterday right here. Now we have like a kind of a pullback here. The next one are a bit too far. We have those points that did work, but they kind of close from each other. Okay, so we prepare our day by saying, do we have any proper levels? I always start with a long time frame, and then I go down with a smaller time frame to see more detail and see if you can see any more buying powers. When I finish my chart, I will check the news. Normally, you check the news. You have to do that every day in order not to be surprised with any economical figure that might occur. So to do that, I think you're all aware of the economic calendar. Today, we have the IPC, which is the inflation that went down an hour ago. So we don't have that much coming. So we quite covered. It's fine. And when you finish everything, you have to focus on the order book. Today, I want you to focus on the order book. That's why I just talk about that very quickly. Now we'll see what we can see on the order book. Here on the middle side, here on the middle, it's the prices. So it's the S&P prices. Here, it's all the order waiting to be bought. Here, all the order waiting to be sold. Okay. Here we have all the volume at price. That means that today, at this price, they did trade 5,830 futures. Okay. Here in light blue, it's 10,000. What it is says what 10,000 futures exchanged at this price, 3,364. Okay. This is the POC. The POC means that's where the buyer and the seller does agree. They do agree at a certain price. That means this price is very interesting for them. So it's quite difficult to enter this price because there's a lot of buyers and a lot of sellers. What we want to see is when we have more sellers or when we have more buyers. Basically, it's a strategy derived from the outcry market. When the investors, they knew all each other, and when they saw like a big buyer, they know this guy, for example, is a trader from a Dutch bank. Okay, we know this guy is a big trader. Whenever he buy a stock, a lot of small traders will buy before him to take the trend because they know he's so big that when he will buy, he will make the market go up. So basically, we won't try to take the whole trend. We won't do a 100-point trade. What we will try to do is pinpoint one exact price where there are some sellers and sell when we see some buyers. That's the principle behind it. It can be very easy to understand what we will manage to see. Then the tricky part is to do it live, basically. So here we have the volume. So that's the order, the market order passed on the market. That means that the buyers, they bought 1,900 lots market here. And on the other side, they sold market. It's not the limit order, it's the market order, because that's the market order that will make the market go up or down. Let's see if there's some seller. What I will do is being contrarian. That means that, I will try to pinpoint the exact location where the market is going up, 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 stop, then we'll be able to sell. Here on my chart, the next level is 74. It's a bit too far. If I see the market stopping around here, I will try to take a position. Looks like a level that my support here, 67 something. If I see at 67 some sellers, so it's around here, maybe 767, I will manage a position and enter the market. So let's focus mostly on the trading flows. We can see some buyers. It doesn't. The thing is, it's before the US opening, so it's not the best time to trade the flow of the market, because investors will tend to wait after the US opening. But let's see if we see some big buyer or something, and we'll enter with them. So let's get down to proper, more easily using time frames. This one. So you can see here, there's like 360 lots waiting here. It might mean that there's a big seller here. Are we protected there? What we can do, for example, is sell somewhere here. Say, okay, it will go back to the POC. The POC moved. It will go back around here, and we are protected by this lot. That means I can sell here, put a stop over here. That means I'm willing to lose 4 points, and in order to win 6-7 points. Okay, that's something we can do. So let's see how it behaves. You can see here, that's where I was talking about, and this volume here, it's exactly one of the lowest of the previous trend. Okay, it's when the market did bounce during the night. It did bounce here, did bounce here, so that's an all right level. It's not the best level we can get, but it's all right. Okay, let's see. It's going there. Okay. If I don't see, for example, I'm trying to sell here. If I don't see any sellers there, I might. Oh, I haven't been executed. That's the problem sometimes. When there's not that much trade, so the liquidity is a bit down, so you might not be executed straight away. Of 24 lots. No, you see, they struggle to buy here. Maybe they're scared of this guy. This guy might be a true investor, or it might be only a spoofing. That means this guy is putting a lot of lots to scare the market to go down. But if the market goes to 66, he might take off all his lots. Let's see if he's real or not. I have my stop here, so I don't care. Worst case scenario, the market goes there. Best case scenario, it goes down, and I get my money here. Don't need to report if I have like okay, I'm out. That's fine. So I've been out here. I bought there. I sold there. I played the 300 lots around here. And as I told you, if the 360 lots disappear, it might be too difficult for me. That means that, okay, the buyer are way stronger than the sellers, then I exit my position. And here the risk reward ratio was all right, was more than 1:2, so it's fine. So here, if I check my chart, we are on here. So I told you the real level I wanted to test was 67 here, but the market now is not that interesting. It will be completely different in 15 minutes. You will see when the US opening occur, the market get completely crazy. So let's see how it behaves until 67. Same time, I can show you the other market we trade. So one is the crude oil. around here, and one is the Nasdaq. We trade the Nasdaq basically the same way. I used to trade the euro dollar, so it's I have 6 screens, so it's another screen. But euro dollar is becoming very tough to trade because the liquidity and the volatility is a bit difficult. So we tend to avoid the tough markets. Okay. Oh, the market went to my point. It's a bit disappointing, but that's the strategy, so you have to stick to it. Basically, I sold. I knew the market might go down to 64. Unfortunately, it went to my stop first. I will show you. Trading settings. Up. Okay. So that's what I need. That's the trade we did together. I sold here. Unfortunately, there was a small, stop orders that were triggered. So the market went up, took my stop, and it went to my target. It's fine. I don't care. That's my strategy. So never mind. So now the thing is not to focus on the past trade, but to check, okay, what's the next trade then? You can see the S&P is way more aggressive. It went down quite a lot, on the contrary of the S&P. So we have first this one broke. The next one might be around here. So let's see if the market goes, if it breaks this one, or if it's going to go to 46.75. Okay. So I have always the chart in the screen next to my order book screens. I have one screen for the order books, one screen for the charts, and I have one screen for the economical channels. And then I tend to change whatever I show on the next screens. Back to the POC. As I told you, the POC, point of control, is this one. That means that's a point where during the day, the sellers and the buyers, they do agree at a certain price. That's where they exchange most of their positions. So you can see all the volume at price, and this one is the higher of the day. The thing is, the US market didn't open yet. So it might not make that much sense because most of the US investors didn't trade. So be careful about how you manage to interpret this information. What I want the market to do is, I'll show you my charts. Okay. Is it going to go there, 62.5? Is it going to go there, 60? That's the level on the M5 chart. So that's less reliable levels, and always put them as well because they might work. But if you put all the small time frame level, you will have a level on every prices. That's the tricky part. Okay, up. So the thing is, before the US opening, especially 15 minutes before, it might be a bit quiet. So let's see what happened, but it might be a bit quiet. At the same time, you will see when the US market opens, it's getting completely crazy. So that's where you have to prepare your day to get more efficient during the opening. So we saw that today we had like the IPC, so the inflation on the US, so the CPI, sorry, in English, the consumer price index. What's the consumer price index? It's the inflation in the US, basically. And you know that they are very focused on this number, because this figure might be the source of all the monetary politic of Powell, of the Fed. If this figure is higher than expected, then it might raise the rates, for example. If, on the contrary, it's far from what it was expected, then they might lower the rates. So that's why, at the moment, investors are very, very paying attention to this figure. It was here, and it was in line. They waited at 0.2. It went out at 0.2. So not that much. Okay, fine. Let's see what will happen next. So we have more news coming tomorrow as well. For today, we're out of news, so that's a good thing. Okay, up. Let's get back to the order books. If you check the order books, it's stuck between two lines, this one and this one, and so basically a range. The markets, when the market is stuck between two lines, it's not necessarily good news for us, because what we want is some more liquidity. As I told you, it's mostly because it's 20 past 5. So of course, they won't enter the market before US opening. They will wait for the US opening to see how the US market is, what direction the US market is taking. And regarding on the market direction, they will adjust their positions. The European session for the moment is up for the down for the European indices, and the VIX, which is the volatility on the S&P, is quite high. I mean, it's plus 5%. Of course, why? Because it went down a lot this tonight. I don't know if you saw tonight. They kind of believe that the Chinese government lied about the coronavirus, so they sold the market because it might potentially be a risk for the world economy. So we had that tonight. Okay, so the market went down a lot. So we are currently still on a downtrend. The market did small correction. I mean, small, it's quite a good correction, but on the S&P. That means that's when everything occurred, the future was open, but the cash market was closed. So it doesn't make that much sense. We'll see how the American will react to the news we had, which is in 10 minutes. So in 10 minutes, normally we might have more trades than what we have at the moment. That's the thing with the US market. You can trade well the whole day, and then it gets crazy suddenly at 3:30. So be careful about your money management and about how you manage the volatility, because it's two different kind of market. The market from the European session and the EU, the European opening and the American opening, completely opposite. It's getting so crazy. So during the US opening, that it requires more focus, and you get to be less risky on those markets. So here, as I told you, what we will try, it's a bit more difficult to see them on the S&P, on the Nasdaq. The Nasdaq is more volatile. It's like the DAX. So basically, you will trade the Nasdaq a bit the same way you trade the DAX. Whereas the S&P is quite in the middle. It's the middle from the DAX and the Euro stocks. It's you have more volume than the DAX, way more volume. You have way less than the Eurex, of course, of the Euro stocks. So it's in the middle. That means you can analyze the flow of the buyer and the sellers. Whereas on markets like the DAX or the Nasdaq, what you will check is, for example, like that, big hands that's coming. Where a big hand is coming, you have like 6 lots, 1 lot, 7 lots. So of course, the market will go down from several points. That's the difference. The difference with very volatile market. So here we have one seller. Same, the S&P is selling. Unfortunately, it's selling 9 minutes before the US opening. As I told you, it's a bit risky. So we won't. I don't think we will take a position before the US opening. That's one of the rules we have. We don't take trade before 9 o'clock in the morning, and we won't take a position in the same way before 2:30 in the afternoon.
Yeah, that's what I wanted to ask. This is the strict rule. Huh? You don't break it. You just wait for the opening. Huh?
I did kind of broke it to take this trade before, which is
okay. Yeah. No. That's not what I mean. But usually you don't.
Yeah, because we normally don't take that. Then I put my stop very closely, and fortunately the market went just up for my stop and went down. This kind of trades, personally, I don't care, and you have to be careful because I saw a lot of people switch completely and tilt because of this trade. For example, they sell, the market went straight to the stop and go down, and then they would get completely furious and try to take more trades. I go back on the market, completely pissed off. So I have my trade, I have my strategy. It didn't go well. It's just a small trade. I don't mind. But then it went straight to the point where, sorry, you can see it. I was showing the wrong trade. Sorry, it's here. So I sold here, it went there, and then straight away. So it went the highest. Why was my stop? It's fine. It's fine. So I won't try to buy here because I'm completely furious. I will wait for my next trade. Exactly. And as I told you, it's not the best time for us to trade because it's 23 past 3. So we have to wait for 3:30 to.
For half. Right. Just to make this sure, you mentioned it before, but this is a platform that's called ATAS. Yeah, because I had some questions right here from our people in the webinar, and so this is a special platform which shows you all the volume which is traded in the market and in the order book. And this is the most important information you have. And as you explained, you are looking for a big number of orders from a seller or buyer, and then you position yourself that you can go with them, huh? Or you are protected. Huh?
Exactly. What we want to see is there a big hand, someone buying? If we see a big buying hand, but we don't see any sellers, we have to buy. For example, if you see big sellers, big buyers, we'll try to manage to get which one is the strongest. Is the buyer stronger than the seller? Is it the opposite? And if you have, it's too much, there's too much risk, that means you can't determine whether the buyer is stronger than the seller, then you don't enter the position. And you can enter a position because at some point there are a lot of buyers, but then the next second there's no buyer at all. If someone, for example, bought all the stocks he wanted to buy, then you have to update your mind every second. The strategy you had, like when you took the trade, might be completely different in like 20 seconds later, even when the price didn't move. Because at some point you saw a lot of buyers, then they stop buying. It's not the same for you. We will take the risk. Okay, I will wait for the buyer to come back, or at the opposite, the seller can come back. So it's all depend on the risk, and that's the most important part. What we want to see is to reduce our risk. Are we able to manage to see if there are buyers or if there are sellers? I don't know if that's clear.
Yeah, absolutely. Yeah. And by the way, you can use the software ATAS with WH Self-Invest. So that's what I wanted to say.
Yeah. Exactly. Yeah. So it gives a lot of edge to use software with Orderbook when you trade futures. For example, here we put the volume of the current month. You have the ask and for the whole month. And for example, sometimes you have an area where it's very low on volumes. For example, those ones that the area will avoid because historically there were not that much trades. That means that if the market goes there, you can jump straight to the next point. So we don't want to be on the wrong side of this movement. So, and you can change that wherever you want. For example, what you do sometimes is is the previous day, previous week, or current day. So the current day showing exactly that. So we see that today the value area is from here to here with the POC here.
All right.
So we are straight in the middle of the value area. So normally, if you follow the market profile strategy, you might buy here with a target, first target at the POC, the next target at the value area high, or you can wait for the value area low to break and take a short position because the market will initiate a new movement to next value area. So which might be around here. That's okay. That's a lot of information. So unfortunately, we have only 1 hour.
So but yeah, no, it's fine because it's a special trading style, and I'm sure that it is a little bit special for our audience today. So it's fine that when you explain more, so that we can understand what you are doing. Yeah, that's completely fine.
And in English, I don't think I can try to speak German, but my German is very limited. Unfortunately.
No, it's okay.
So in 3 minutes, we'll have the US opening. You will see normally before the US opening, it's the same as before big figures. The market will get a bit quiet. I mean, the liquidity will be removed. That means all the market makers are traders that are paid by the exchange to provide liquidity, because big investors, banks and stuff like that, they don't want to enter a market where the liquidity is very low, because you will have a spread, you will have difficulties to enter the markets, to exit the markets. So they want a market where everyone is trading and when the volume are very high. So to do that, to attract all those investors, all those institutions, they pay market maker to provide liquidity. But before big figures, for example, the non-farm payroll, or before Draghi speaks, or a bit before the US opening, the uncertainty is very high, so they remove their order most of the time, because there's a huge chance that their order might be hit by the market. So they remove it just before some big figures and they put it back when the market come back to normal. That's why we don't enter before big figure, before huge speak, for example, like if it's Christine Lagarde or if it's Jerome Powell, we won't enter. And before the US opening. And when the market goes back to normal, that means few minutes after the US opening, then we are able to manage the liquidity, we can manage the volatility, and we can enter back in the market. So that means like a minute now. Okay, we'll see how the market behave for the opening. Okay, so I have to be focused. I have my most of my level are drawn in 2 different charts. So I have like 1 5-minute one and 1 5-minute chart and a 1-minute chart. And if nothing happens, then nothing happens. It's fine. And I don't think I will take position on this one or the euro dollar. The euro dollar, as I told you, it's very tough to trade it at the moment. It's very weird. Okay, let's see if there's some excitements. You can see it's starting now. You have the opening bell. You see the liquidity is completely different. It's trading a lot. Sometimes you don't see it on the chart, but you can see it straight away here. There's one seller around 52.5 on the Nasdaq and one buyer around 49. Let's see which one breaks. Is it this one or this one? The S&P, of course, is quieter. Okay, it broke then. It went back straight away. You see the seller was waiting for the buyer to come back. So let's see. For them, will they interpret the bad news we had today and keep the downtrend, or will they just adjust their position in the other way? Oh, I'll do that when it's too volatile sometime. Okay, we are back on the volume area. Here 60 is quite a good volume area. You can see on my chart, that's a buying setup we have. I will just let 1 or 2 minutes pass to see whether the market is calming or not. See, it's very tough to enter here because all the, most of the volume of the day are done during the opening and the closing. That means that's why they want to reduce the trading day to 10 o'clock on for Eurex to 4 o'clock, I think, something like that, because they said there's no point during the day. There were not that much trade passed on the market. So if you reduce, we'll have more liquidity for less hours. Okay. So first we have like a down candle, then green one. Okay, we have one resistance at 67, the one we talked about a bit before. Let's see how it behaves. See one seller here, 672. Will he be able to maintain the market? Yeah, he was able to maintain the market. We saw it. But as I told you, at this point, it's very tricky to enter because the market is very, very aggressive. Ooh. I must stop there. Okay, off. We are 67, the resistance we talked about. See here, we have a lot of trade passed. Okay, oh, this is small. I see a few sellers. Let's see if the sellers will confirm their positions. Okay, there's one buyer that doesn't let the market breathe, which is not the good news for me. So if I see that the seller doesn't confirm, then I will exit. And my target is just before the POC. The Nasdaq is going down. Unfortunately, the Nasdaq is more bearish than the Euro stocks. The Nasdaq is completely crazy. Up, okay, here it doesn't let the market breathe. So if you might go back here, I will exit, I think, because I don't see that much sellers. I saw sellers here, but I don't see them here. 67, which is the resistance we had before. Now it's kind of a support. Okay. I exited my position because I wanted the market to break 67, but I saw too much sellers, and fortunately I was right because now the market is going up quite a lot. The market is still going up. We have a seller at 74.5, sorry. I might try to get to the S&P again here. But the next level, next S&P level is unfortunately a bit too far. I will see if I can manage to get another point. This 75 is the target we had before. Up. Only buyers, you see, only one seller here. Haven't been executed. Okay, I haven't been. We saw the seller here, but it was a bit too fast. That's the thing with the opening. It can be very, very quick. Okay, here on the S&P, do we have a seller here? We have a seller at 6. Oh no! We made both of them. Okay, no worries. We'll manage to get into the markets. That was one good point, unfortunately. Okay. We missed the 77.5. Unfortunately, it was a good trade. We missed this one as well, which was also a good trade. So that means that we are able to interpret the market correctly. I mean, so it's 36. The more the market will advance until half 4. After half 4, I'm only waiting for more secure trades. So from there to half 4, the more it goes to half past 4, the better the market will be, because the liquidity will reduce a bit. We still have a lot of liquidity, and the volatility will decrease as well, so it will be more tradable. Okay, is the S&P going back to 77? That's what we want to see. It did a perfect pullback. Okay. Stop there, pull back around here, and then let's see if it's going down or if it will confirm the reversal and go to those areas. And at the same time, if you check the S&P is way less bearish. It doesn't go down that much. So sometimes the market are correlated, and sometimes the spread during, I mean, the difference between those two markets is widening. That means sometimes, normally, for example, let's say the S&P does 1%, and let's say the Nasdaq does 1%, but sometimes the S&P does 1% and the Nasdaq 2%, for example. That means the spread is widening. Okay, we're going to pierce this level. That's the highest is 78. I don't want to take it because it's testing for the second time. I don't want to take risk. We missed it the first time, so this time I'm going to wait for it to break. Okay, if it doesn't break, we'll wait for it to go down, and maybe buy around 71 or something like that. Okay, the S&P, as I told you, is correcting, and maybe we'll go. Let's see if the S&P is going to. So that's the pullback. Okay, it already did the pullback, whereas the Nasdaq, oh, you see one big seller. It doesn't let the market raise now. It's selling, saying there's no buyer at all. Now there's a small buyer, not that strong, small buyer. So we wait for the market to stop. Okay, one last. I think the market will drop a bit more. You see, it doesn't let the market go up. Breaks this one. The next level is at 58. It's around here. Let's see if the market will confirm around here or if it will bounce here. You see, it did bounce, so it did the perfect pullback. Oh, sellers. Okay, is the buyers here? It's testing the second. I wanted it on the first attempt, but now I don't want it anymore. I don't like to take trade when the market is testing a level for more than 2 times, because then there's a huge chance that the market will break it. So that's why I don't enter after it tested the level like few times. Here is the case. So it's testing. So now when it will break, I will rather take it lower than here. So here this buyer is around 60, is around 67. So it is here, around here. Okay, you see, whenever it goes there, the market is bouncing straight away. but then you see the S&P is compressing the market to this level, and same time the Nasdaq is just selling more and more whenever it goes there. It's okay. The seller is breaking. The buyer is breaking. Oh, it didn't go to my level. It's fine. Oh. The market is very, the graduates in our training floor are very surprised because the market is quite volatile today, which is good. Okay, same again. Sellers going back to 67, or here on the so 60, 67. Oh, it's the same level, 67 for the S&P and for the Nasdaq. So here for the S&P 65, 67, and there for the Nasdaq 67 as well. See, whenever it goes there, it just bounce. So you have two choices: take the bounce or take the breakout. I mean, sell here and try to take the whole move, or buy here and take some bounce. But as I told you before, because it did test this level a few times, I'm not very confident with buying there. It works, but it's fine. I don't mind. I don't want to take risks that are not managed. And now it might go up around 67 on the S&P, which is 75 on the Nasdaq. We have a level here. Okay. No. Okay. No. That's the level. You can see whenever it goes there, they stop buying, and the seller is just pushing back to 70. Pushing back again. Oh, so the buyer failed. Go back to 77, 67. Now you can see a huge buyer here and a huge seller here. So back to 67. Now it's the full range there to there, and same for the S&P. Back to the POC. I think the POC might be around here. I don't even know where is the POC today. It's quite long. The market went down a lot during the night. I don't know where the POC is. Okay, it's here. This might be the next POC. So here we are in the middle. It's too risky to take the trade here because it might go there or it might go there. So as we don't know for sure where it's going, the probability that our trade succeed is low. So we don't take position. That's one thing we teach here is for me when I'd rather lose my time than my money. Okay, here again. Okay, oof, you can see it really doesn't let it go up. Again, okay, 76, the level is there. 76, what's going to do? If it's selling again, it's a bit of a pain. Can be patient, but okay. Breaking again, a bit more. Okay. That's why we tried to sell 10 minutes ago where we haven't been executed. Okay. Just so you can see, we have an hourly level around this area. That's the Nasdaq. So it's on the 1 hour. 84. This one is quite a good level. See, it worked like for the past 3 days. That was 68. It's quite strong level, so we keep an eye on it. I obviously wanted to break to enter a better position, but you can see that the sellers are very strong there. I always reset the market orders because it gives me an insight of what's the market really, who's got more power between the buyer and the sellers. Seems like it's always the same. It seems like it's breaking, but it's not. It did test, a few times. That's why I don't enter there. It's too risky. 1 time, 2 times, 3 times, 4 times, 5 times. At some point, it might break. So it might go there. It might go back there and do like a double top or something like that. But for me, there's a lot of chance that the market breaks as the buyer keep on testing this 78 level. So for me, there's no point selling there or buying there. For me, I'm waiting for the level to break or not. If it breaks, then I will enter at 80 something, 84, which is the next level. You can see that's actually where the next volume will be. And there's a small gap, and the next afterward are that. But then the market struggle to get there. You see, it's not whenever it goes there, when big buyer is just smashing the market. It went from a very volatile market to some dovies. That's what happens during the American opening. Okay, back to the POC. This is going to go to 678. So that's the thing. The thing we do is when we have a strategy, you have to respect your strategy. Otherwise, I say, okay, let's sell. No. I have like a high percentage success rate strategy, then I will stick to it. And okay. From there, we have 2 choices. Either it goes to 78 or it goes to 67. And in between, I don't see what might happen. Boom, 67. Okay, straight. You see, straight to 67. It's S&P, but the moves are identical on the Nasdaq. Just so you check both of them. Is 67 going to work again? You see the lowest are getting higher and the higher a bit higher. So the trend might be up. And you have a big reversal candles. You always have big reversal candle on the down side of the range of the trend. So it might go up. Let's see if it's breaking there. The moves are very big. It's just 40 points in less than a minute. Okay, then again, 78. You see, that's one big buyers fighting a big sellers, but normally they're not that far. Here you have like 60 ticks between the sellers and the buyers. 78, is it going to break? Looks like it will break. I don't do breakouts, but if I did, I will try to buy somewhere here. Oh, see, they put like 135 lots. Let's see if those lots are real. If they will find some buyers. Oh, it seems like there are some real trades. You see, the Nasdaq is way more like visual than the S&P. The S&P will have to take the flow. Okay, now they for example, they're putting more lots, more waiting lots. Here it's more visual. See, okay, from there to there, from there to there, it's pushing, it's going back, pushing. So you see the buyer pushing, the seller pushing on few because the liquidity is, the volatility is higher. You see here waiting orders are very low. So if, for example, someone has to buy 100 lots, we will move the market on more than 10 ticks. Whereas here, if you buy 100 lots, it doesn't do anything. So it just stay in the same price. That's the difference between those two markets. That's why the reading method is also a bit different. Back there, you see, it bought everything. It bought everything there. My break. Okay, let's see. Is it breaking, or is it a false break? What we call a false break means just breaking to hit all the stops, and we'll get back to the range. It went back to 78. Okay, come on, a bit more. Yes. Have level at 84. It stopped just before. No. Okay. Don't let the market breathe, which is bad. If I don't see, oh, I see a lot of buyers. That's a pain. See, normally those points they have to working straight away, and here the market, the buyer is just buying, just sticking to the tops. There's like one seller here, but it doesn't look that strong. Wow, that's a pain. So I will wait for the next order. Normally those trades is just in and out. That's why I don't like to stick to these trades. I just exited this trade straight away, no loss, so it's fine. And because I think I can put it in a better, I was fortunately right. No sellers. You can't see any sellers. You see, the market is just buying straight away. One small seller here, but the buyers just stopped it straight away. You can see the difference between now and the bit before. A bit before, they were selling from 78 to 80 to 78 to 67. Now, when it goes down just a few points. The market, the sellers, they don't let the market go down. You see, and that's not a good thing for me. That's why I told you if I was into breakout, I would take it there at 79. But I don't do breakouts. Tarek does. I don't do them. See, the buyer are way too strong. They don't let the market go down. They just keep on buying. The next level is tack. Just broke this level. The next level is a bit far. We have the figure at the round point. This one. We have, I think it's 90, tack, on the chart, it's around 90, 91, 92. Oh, we're already there. Okay. It's very tough to put an order here because you don't see any seller. Okay, can we have some sellers? Oh, there's one seller here, but it's very small. It is very small. The thing, that's why I don't enter any seller. I was willing to sell at, I sold 84, but now I don't see any sellers, so I won't enter the market here. Unfortunately, you see the buyers just keep on buying, keeps on buying. Okay, one seller here. Too late. Up. Oh, was it the reversal? Oh no. And we did say 92, 91, 92. S&P is very quiet on the other hand.
So this is how a rally looks like, huh?
Yeah, you see.
From the order book side.
On the order book here, there's no point where we could make a short position.
No, I saw it. Yeah, you had no chance.
Which is big security for us because it did allow us not to take any wrong trades. But then again,
yeah, but it's a nice lesson for us to learn, yeah.
Yeah, when it did reverse, it was way too quick.
Yeah, absolutely.
Yeah, it's unfortunate. I tried to solve 78. I haven't executed. It's the thing when you don't adapt. I didn't adapt well to the volatility, so I haven't been executed, which is fine. But on the other hand, you see, when you manage to get a hand on the order flow, you don't take the wrong position. So now the market is correcting.
Yeah.
The movement.
I know you are quick, but not that quick.
Today I'm pretty slow.
No, not really.
Okay, the market might go down to 84, the previous. That's why we took a position. So I sold there. That's why it's very important. Sometimes when you put a stop, that's not because you have a stop that you have to let you have to let the market go to your stop. Basically, I had a stop at 90 something, but I didn't see any sellers. So there's no point for me keeping my selling order on the market when I don't see any sellers. So I exited. I don't wait for the market to go up, to go all the way to my stop to exit. You know what I mean? So it's very important to just let the market take the decision for you. If you are buying and you see a lot of seller, just exit. Exit straight away. Don't let for the market to go to your stop and lose money not very in a clever manner. Okay, it was a pleasure. See you later. Thank you. Bye-bye.